Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. And note, Bookmap is just encouraging everyone to join Discord. You do need a Bookmap subscription, and you can, if you do not already have a Bookmap subscription, you can get a free subscription. That's the free digital subscription. And then you will need to verify your account so you can participate in chat and watch the streams in Bookmap Discord. And here, if you scan this QR code, that will send you to the verification for your Bookmap Discord. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks and the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is order flow, options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. Here's my agenda for today, Wednesday, September 11th. First of all, I want to go over news items, economic data, and events for today, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll take a look at some setups from earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. I'll be glad to do that. All right, let's get started with economic data and events for today. So first of all, the big key data release for the week was this morning. The CPI data came out at 8:30 a.m. Eastern Time. And we'll take a look at the reaction in the S&P 500. It's quite interesting today. So most of the CPI data came in line with forecast, in line with the previous number, except this core CPI month over month, which came in higher than forecasted, forecast, and higher than the previous number. All right, so that is the CPI data. Just quickly for the rest of the week, tomorrow PPI data comes out, as well as jobless claims at 8:30 a.m. Eastern Time. We may get to go through this all over again. And then on Friday, Michigan consumer sentiment at 10 a.m. All right, so big data number this morning. Now let's take a look at the reaction in the S&P 500. So this is the data release. Initially, a little bit of a bearish or negative reversal lower. Price rallied back up to this very important level here. You can't see the label, but that is the SPX 5500 absolute gamma strike, and importantly, the volatility trigger. Very important to watch how price reacts at the volatility triggers. And this has been key for quite a few days now. So just before the cash open, price reversed lower below that 5,500 volatility trigger, which was just below the SPY 550 volatility trigger, also the absolute gamma strike. Found support at the SPY 540 put wall. And then has, that's the biggest V I've ever seen. I don't know about anybody else, but that is definitely the biggest V that I've ever seen. All right, so let's step back now, take a look at a higher time frame before I talk more about this chart. I'm going to go to the SPX, the underlying index. This is a one-day chart showing 1 year of data. This is Thinkorswim, again, a one-day chart. Let's pick this up in July. This correction began July 17th. That was VIX expiration, 3 days before the July options expiration. Price dropped lower, down to the 51.19 low on August 5th. So let's pick that up now on a 1 hour chart. SPX 1 hour chart. There's the August 5th 51.19 low. After the yen carry trade unwind over the weekend, price rally, came back, tested the 5,200 put wall, then consolidated between 55.60 and 56.50. And then last Tuesday, broke below that consolidation, found support at the 5,400 put wall, just above it, and then that 5,400 put wall held today. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. You may not be able to see that one. There's a Spotgamma level right around the same level. So that's the lower weekly expected move. This is the upper weekly expected move. This is based on the options market, based on the closing price for SPX. From last Friday, those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. Note I do post those levels in Discord, every day the evening before. And note SPX did trade down below the lower daily expected move and now is back within that range. All right, the dark red lines on this chart are showing spot gamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. I'm going to point out the key daily levels. First of all, the put wall at 5,400 and price, that level held as support. And actually, again, it was the SPY 540 put wall that held just above that 5,400 put wall. The next level up is 5,500. That is the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And that is also the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And that was definitely in play for today. We'll take a look at the Vandal model in just a minute. All right, so market makers trading with price, selling futures as price drops, and then buy back their short futures as price rises. And then finally, the call wall is at 5,700. That's a strike with the largest net positive gamma. That can be expected to act as resistance. So potential ceiling for price at 5,700 and the floor that has been tested today at 5,400. Note there were no shifts in levels for SPX or SPY today, so all levels remain in place, no changes from yesterday. All right, let's wrap up our view of SPX with a 1-minute chart. Let me zoom in just a little bit here. So here's the previous test of 5,400. That was last week, last Friday. Again, that was actually SPY 540. I think I showed that on Monday. A little bit of consolidation. Then the biggest V I've ever seen. Support at SPY 540. And now S&P 500, SPX trading above its volatility trigger and above the lower daily expected move. All right, so those are the levels in play for today. Put wall 5,400, successful test. And now let's see we'll keep an eye on what happens at the 5,500 volatility trigger. All right, on to Bookmap now. So in Bookmap, I have my own cloud notes. Let me clean this chart up just a little bit. By the way, for those of you who are Bookmap users, if you see these vertical yellow lines on your chart, one way I found to clear these up is to turn off the stops and icebergs on chart indicators, and that cleans that up. All right, so we'll just leave this like this. Leave the chart like this. All right, so in Bookmap, I have my own cloud notes. So I can show SPX levels. There's the 5,500 level, and up above that, the 55050 gamma level, and then the also SPY level, SPY 550 absolute gamma strike volatility trigger, and then on the downside, the 5,400 put wall, a combo 1 level just above that, and then the actual support level, again, the SPY 540 put wall. All right, note there is a difference in price between ES and SPX, and today it is right around 6 points. So ES minus SPX equal 6. So I'm showing the 5400 SPX 5400 at ES 5406. Note that number does change every day. I'll also post those index relationships that I'm using every day in Discord. I post the preliminary and the final numbers that I'm using. And those numbers tend to get smaller as rollover approaches, which will be next week. And that will widen out pretty substantially, maybe up to about 60-point difference. And we'll talk about setups in a few minutes. All right, so that's the S&P 500. Again, no shifts in levels. Let's take a look at NASDAQ now. Very similar pattern. NASDAQ very strong today. May go, probably will go from the lower daily expected move. This is for NQ. Lower daily expected move. Now next target up, the upper daily expected move for NASDAQ. All right, so this is the NQ futures and Bookmap. Let's take a quick look at the underlying index charts. I'm going to take a look at QQQ first. Let me zoom in on this chart. Looks like I need to adjust my lines here. All right, so just like the S&P 500, QQQ reversed lower at its volatility trigger, the 460 volatility trigger, just right before the cash open. Made a V around 11 a.m., now trading well above that volatility trigger at 460. All right, so similar pattern for QQQ this morning, reversing lower just before the cash open at its volatility trigger, reversed higher. Now, unlike the S&P 500, QQQ trading well above its volatility trigger at 460. That's also the absolute gamma strike. And let's take a look at NDX, then we'll get back to Bookmap here. Here's the volatility trigger for QQQ NDX at 18,910. Note that was the only shift in levels for the NASDAQ, and it shifted 10 points higher, which is not significant for NDX. All right, so NDX did not quite make it up to its volatility trigger at the open. Sorry about that noise. That was just an alert I had set. All right, so another amazing V. Now, NDX trading well above its volatility trigger. All right, back to Bookmap. Looks like I need to clean up my levels a little bit. Let me turn off the on-chart stops and icebergs, just to clean up those vertical lines. All right, again, we'll talk about setups in a few minutes. All right, let me wrap up my positional analysis. Let's take a look at gamma notional and then the Vanna model. This is market maker's position on the gamma curve at the beginning of the day. Whoops. For the S&P 500 and the NASDAQ, note with the exception of NDX, all these numbers were negative this morning. So our negative gamma environment for an index, Spotgamma assumes that traders are long puts, market makers are short puts. Hence the negative gamma, and they have to trade with price dash to the delta exposure. Those numbers did shift higher from yesterday, but still negative with the exception of NDX, which is typically so small it doesn't matter. All right, let's wrap up positional analysis by taking a look at the Vanna model. For SPX, I always like to take a look at this in negative gamma. It does make a difference. What this chart is showing is market maker's delta exposure on the vertical axis, the price for SPX on the horizontal axis. There are two lines on this chart. The first, the white line, shows how market maker's delta notional may change with changes in price. And the purple curve adds implied volatility to the equation. That shows how market maker's delta notional may change with changes in price and implied volatility. And that's the curve that we want to take a look at. All right, let's take a look at how market maker's delta notional has changed throughout the day. So let's identify some prices. So we know the 5,500 volatility trigger. And it's just right around here. That was the pre-market high of the day. So far, the high up until now. So 5,500. And we know that SPX traded down just to around 5,400. So as price moved lower, implied volatility increased, market makers' delta notional increased. They want to remain delta neutral. Their job is to make markets and hedge their delta exposure. They want to remain delta neutral. So they had to sell futures to hedge their delta exposure. And then as price started to reverse higher, they could buy back their short futures as their delta notional price increasing, delta notional dropping, implied volatility dropping, they could buy back their short futures. So that's how market makers' delta notional may change with price in a negative gamma environment and how market makers have to hedge. So I always look at this. This indicates to me that there will be a wider trading range, higher volatility for the day in a negative gamma environment. All right, so my thesis for the day was looking for moderate to high volatility, also to watch reactions at the volatility triggers, put walls, other key gamma levels after the data release. All right, so let's move on to taking a look at some setups now. Moving on to real-time data. So the information that we've looked at so far, other than the Bookmap, is based on static data, gamma-weighted open interest. Spotgamma takes that open interest, applies their algorithms, comes up with levels that we looked at on my chart, on the charts. And now let's move on again to real-time data. I'm going to start with the S&P 500, talk about setups. And as always, I'm going to start by taking a look at what options traders have been doing today. So starting with the S&P 500, this is the hero signal, hedging impact real-time options. So again, we're moving on from positional analysis to execution, to real-time data, taking a look at what options traders have been doing. What this chart is showing is options trades and market maker hedging activity, again in real time, for the S&P 500, a combined signal of SPX, SPY, XSP, and ES futures. This is the index signal. And there's another signal that we can take a look at for the S&P 500. This is the equity signal. What this chart is showing is options trades and market maker hedging activity for a combined signal of all 500 stocks in the S&P 500 index. Note this chart is typically smoother and more in line with price, providing confirmation, whereas this S&P 500 chart is choppier and I think can often provide more of a leading indicator. So I'm going to start with this, the S&P 500, open up full screen, zoom in a bit. We'll take a look at the morning. There are two lines on this chart. The first, the white line, is the price for SPX, and the purple line is the hero signal. And a falling hero signal indicates traders are taking negative delta positions. They're buying puts and or selling calls. And note, from the open, traders were taking negative delta positions. And when traders take negative delta positions, market makers take the opposite side of those trades, and they have to sell futures to hedge their delta exposure. All right, zoom out just a little bit, and note how that started to shift higher, 10:30 to 11 o'clock, and price reversed higher after the test of the put wall. All right, let's go take a look at Bookmap. Go back to ES. Stephen asks, how does one use this info to trade futures, knowing the delta notional and Vanna theory? Like I said, I look at gamma notional every day. This, again, that gives me an idea of the expected trading range and volatility for the day. Am I looking for a wide trading range? I'm looking for a wide trading range, more trend-like behavior in a negative gamma environment, and more narrow trading range, more mean reverting price action in a positive gamma environment. And the Vanna model, again, just gives a visual representation of that. All right, so Stephen, again, that's something that I look at every day. And I mark that in my notebook every day in my trading journal. All right, let's take a look at setups. Let's zoom in. So again, this line, you can't see the label because of the upper weekly expected move there, lined up almost exactly with the 5,500. That's the upper weekly expected move for ES, not SPX. But that's right on top of or right next to the 5,500 level, that white line right there, 5,500 volatility trigger, acted as resistance right before the cash open. And we saw with the hero signal, traders were taking negative delta positions. Price reversed lower. Let's take a look at the subchart. I turned off let me turn back on the on-chart indicators for stops and icebergs. It'll take a minute for that to load. So looking at this light blue line, this is the subchart indicator for icebergs, showing that large traders were fading that move with iceberg orders. Again, large orders they use to hide their size, sell iceberg orders, and then as price started to move lower, sell stop orders helped to fuel the move lower. And this is kind of unusual. Cumulative volume delta was rising, and you can see all the green volume dots there. The volume dots of Bookmap are showing market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots, more sellers than buyers. And there were aggressive buyers on the way down. But again, today, at least in the morning, options traders and large traders with iceberg orders, smaller traders with sell stop orders were helping to fuel that move lower. All right, so the aggressive buyers finally got their way. You can see all the large green volume dots coming in as price approached that SPY 540 put wall. Cumulative volume delta rising, and then as price started to move higher, buy stop orders helped to fuel the move higher. That's shown by the rising yellow line. All right, let's go back to Hero now. I'm going to shift to puts and calls. I'm going to have to jump to avoid the auto zoom. Jump back. So you can see right around 10:30, traders started buying calls. About 10 minutes later, they started selling puts. Price reversed higher. Again, at the put wall. And then starting right around noon, they started selling calls again. 30 minutes later, started buying puts. At this point, let's move over to the equity signal. See if we can get more clarification. So in the afternoon, in this reversal higher, the equity signal is providing much more clarity. Starting around 10:45, traders started selling puts. Good options traders taking advantage of the high volatility, the move lower, selling puts, started buying calls. Flow alert, very timely flow alert there. Signal to the potential mean reversion and the hero signal potential reversal. As traders shifted from slightly selling calls to started buying calls. Let's zoom in on this just a little bit. So in the morning, I thought the index signal was much more bearish than the equity signal. Right, so again, traders were initially buying puts, also buying calls. Then starting around 10:50, 11 o'clock, they started selling puts, buying calls. Price reversed higher again at the SPY 540 put wall. All right, that's the SP 500. Let's take a look. Oh, Hector is asking about the purple line above the V structure. Let's go back. I can't tell what time that is. Hector may be right. Maybe right here. This is part of the icebergs on chart indicator. This indicates this order was partially executed, and then when this horizontal line terminates, that indicates it was finally executed. So partially executed here, and then the execution completed here for the sell iceberg orders. All right, so that's what the horizontal line means. All right, that's the S&P 500 setups. Great short and long this morning. Huge range. 100-point range or 100-point plus range in both directions. Let's take a look at NASDAQ now. And NQ heading up towards its upper daily expected move. Let's see, go back to Hero. Let's see what options traders have been doing. I'm going to go close full screen. I'm going to start shifting, go back to total signal, So there are two signals that we can take a look at for NASDAQ. This is the combined signal, NDX QQQ. This is the index signal. I thought provided more clarity in the morning. And then the other signal that we can take a look at, similar to the equity signal for the NASDAQ, is this MAG 7 signal, showing options trades, market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. This was never really bearish today. We can zoom in just a little bit. This was, I would say, either bullish to neutral. Bullish, neutral, neutral, then very bullish starting around 11. All right, let's start with the index signal. Go back to full screen. Just like the S&P 500, this was bearish from the open. Traders take negative delta positions starting around 1045, 1050. They reversed, started taking positive delta positions. Price reversed higher. And again, remember the MAG 7 signal was never really bearish. And Hector, I would say if you have more questions about iceberg orders, whether they're filled or not, I suggest watch Bruce's webinars. He starts at 10 a.m. Eastern Time, Monday, Tuesday, and Friday, and he can answer your questions about iceberg orders. All right, there's the MAG 7 signal. Very similar to the S&P 500 equity signal, which is often the MAG 7 plus 493. All right, let's go to Bookmap now. So keep in mind looking at the index signal this morning, very bearish. Price reversed lower. Don't see the label here, but again, that was the QQQ 460 volatility trigger, which is just below the NDX 910 volatility trigger. Price reversed lower, found support at the NQ lower daily expected move. Aggressive buyers, you can see in the case of NASDAQ, the aggressive buyers and sellers were more in charge of price. Falling cumulative volume delta on the way down, and then at that test of the lower daily expected move, magenta dots turn to green volume dots. Aggressive buyers start to come in. Cumulative volume delta rises. Buy stop orders help to fuel that move higher. Let me turn the stops and icebergs on chart on again. All right, so again, NASDAQ heading up toward the upper daily expected move. And by the way, for NQ, the daily expected move range was plus or minus 262 points. So that'll be, if price makes it up to the upper daily expected move, that will be a 500-point range from low to high for NASDAQ. All right, any questions about the indexes? Hello, Trader HE. Welcome. Glad you're here. Haven't seen you in here in quite a while. All right, let's move on. Let's take a look at some stocks. First stock I want to take a look at is AMD. And keep in mind what I'm watching today, what I watch every day. First of all, I watch reaction to key gamma levels. That reversal, the reversals that I talked about in both the S&P 500 and NASDAQ, the volatility triggers were key this morning for looking for a bearish setup, looking for a move lower. So I watch reactions at key levels, I watch order flow on Bookmap, and then I watch hedging flow and Spotgamma Hero, and combine all of that information for my setups and the way I look at the market. Stephen asked about put and call walls for yesterday. No changes for the S&P 500 and NASDAQ. So no changes to put walls and call walls for both the S&P 500 and the NASDAQ. Trader HE, again, welcome. Asked what were the ES call and put walls today. All right, so ES does not have put walls and call walls. I'm looking at the put walls and call walls for SPX and SPY, and I have put those on my ES chart. So for SPY, put wall 540 held as support, and then just below that, the put wall at 5,400. And again, I'm using the index relationships that I post in Discord every day to show these correct levels on my ES chart. Now, call walls well above at SPX 5,700, certainly not in play, and for SPY at 570, also not in play. All right, let's take a look at stocks now. All right, here's AMD. I have several stocks on my list I want to take a look at. Go to AMD. The hero signal was a little bit choppy today, or definitely choppy today. But again, I'm looking at reaction at key levels. Here's the call wall, 145. I know in a weak market, if price is trading near a call wall, it is most likely going to do its job and act as resistance. So choppy hero signal. Let's go take a look at order flow and Bookmap now. Negative opening print. Aggressive sellers come in. Price breaks below the 145 call wall, trading below VWAP. I'm using the Market Pulse price change indicator in the subchart to help me highlight the deeper pullbacks for shorts. Then right around the time that the index has found support, AMD did as well. Now trading back up toward 146, high of the day. Note the high liquidity in the order book. Looks like that might have been pulled before price reached that level. Above price, there's a limit sell orders. That's the heat map and Bookmap showing a history of the limit orders. Looks like the limit orders, sell limit orders at 145 at the call wall were filled. All right, so that's AMD. Go back to Hero. Again, a pretty choppy Hero signal. But the key was the order flow as well as the reaction at the 145 call wall. And it looks like put sellers were definitely driving this reversal higher, shown by the rising blue line. Traders sell puts, market makers buy puts, and they have to buy stock to hedge their delta exposure. And then call buyers took over. All right, next stock I want to take a look at is Amazon. Zoom in on the morning. So in the morning it was primarily call sellers. That's shown by the falling orange line. And again, a reaction at a key strike. Again, here's the key gamma strike. For AMD, it was the call wall, and for Amazon, the key gamma strike acting as resistance. Traders sell calls, price moves lower. Let's go take a look at Bookmap. Go to Amazon, 180 key gamma strike, right there. Opening print, very bearish, and price drops immediately lower. Find support around 11 a.m. at 176. Note the shift in cumulative volume delta. Negative there, then a reversal in cumulative volume delta. You can see all the green volume dots. Aggressive buyers start to come in. Now price trading above the high of the day, the opening at the high of the day. Let's go back to Hero. So again, call sellers, driving price in the morning. And now they have turned to buying calls. So it's call sellers, call buyers. Starts to reverse higher. Looks like a block order in there. Large institutional order, buying calls. And call buyers continue to drive price. Next stock I want to take a look at is Meta. Hero signal a little bit more clear for Meta this morning. Falling blue line indicates traders are buying puts. When traders buy puts, market makers sell the puts, and they have to sell stock to hedge the delta exposure. And again, just around 11 a.m., that turns around, they start selling puts as price breaks below the 497.50 hedge wall. And note after 11 a.m. they started selling puts, buying calls, blue line, orange line moving the same direction. Very powerful directional indicator, and price moves higher. Let's take a look at Bookmap. So Meta traded up to around its opening, maybe just a little bit above, now moving lower as traders stopped taking positive delta positions. Took a little while for this move lower to play out. Trend break, aggressive sellers come in. You can see all the magenta volume dots. Find support around 11 a.m. Aggressive buyers start to come in. You can see the shift from magenta volume dots. Sellers are exhausted. Last few little magenta volume dots. Aggressive buyers start to come in. Price moves higher. Let's go back to Hero. So now traders have stopped selling puts. They've started selling calls, and price is starting to move lower again. Next stock, NVIDIA. Very strong day in NVIDIA. From the open, traders aggressively buying calls. Take their foot off the gas for a few minutes. Start buying calls again. Also selling puts. Take their foot off the gas. and then price starts to move higher right around 10:45 as traders start buying calls again. So call buyers definitely driving price in NVIDIA today. And price is trading above its 110 call wall key gamma strike. For a stock, Spotgamma assumes that traders are long calls, market makers are short calls. Calls concentrated at 110, market makers short calls. So as price moves up above that level, the delta of those calls at 110, they go deeper in the money, their delta is increasing, and market makers have to continue to buy stock to hedge their delta exposure. Traders are buying calls, their short calls at 110 are going deeper in the money, their delta is increasing, and they have to continue to buy stock to hedge their delta exposure. So net for the day, traders are buying calls in NVIDIA, very bullish day. They're also selling puts, shown by the positive notional value for the blue line and the orange line. Let's go take a look at Bookmap. Go to NVIDIA. So NVIDIA, very small down move this morning. Looks like NVIDIA started moving higher before the rest of the Mag 7 and also the indexes, and could have been, certainly probably was, a key driver for the reversal in the indexes. Aggressive sellers on the way down. Smaller volume dots. Sellers are exhausted. Aggressive buyers start to come in. As call buyers come in, price moves higher. Slices right through the 110 call wall key gamma strike. Looks like the high liquidity at 112, 113 consumed. And now we'll watch and see at 115. It looks like some aggressive sellers are starting to come in. All right, Stephen, I'll get to your question in just a minute. Let me take a look at one more stock. Tesla. All right, here's Tesla. Again, it took a while for this breakdown to occur. Trend break. Looks like around 10:15. Let's see what options traders are doing. And note for Tesla, 217.50 is the hedge wall. Price moved down a little bit lower than that. Let's go take a look at Hero. Go to Tesla. Let's zoom in. So I noted the little bit of a move lower, consolidation chop, and then a trend break right around 10:15. So let's take a look at that. So let's take a look at the peaks in the Hero signals. I've talked about this peak reversal quite a bit. It's pretty evident in Tesla today. Note, Tesla made a slightly higher high, while the call line made a slightly lower high. The peak there, and then the blue line, orange line started to move in the same direction as Tesla broke that trend line and started moving lower down to the 217.50 hedge wall, and just 50 cents lower to 217. And then Tesla started to reverse higher, somewhere between 10:45 and 11 a.m. as traders started selling puts and buying calls. Price move higher. All right, there's Tesla. $217.50 hedge wall. Aggressive buyers started to come in. Traders started taking positive delta positions. Now price moving up. Looks like above the open. All right, let me check for questions. Stephen asks, is there a difference in stock and futures with the market maker's positioning? Yes. So this is not entirely true, but this is Spotgamma's assumption. For an index, Spotgamma assumes that traders are long puts and short calls. That may be due to how large traders, institutions, will hedge with the SPX, for example. So remember the JP Morgan hedge. We talk about that at the end of every 3 months. What JP Morgan will do, they will sell an out of the money call and they will buy an out of the money put spread. So the simple assumption of that is they will sell a call and buy a put. And that is called a risk reversal. And that's how they hedge a large portfolio of stocks. Again, they will buy a put and sell calls to hedge a portion of their delta in a large stock portfolio. So that, I think, that is the basis of the assumption for an index for S&P that Spotgamma assumes. Now, for a stock, Spotgamma assumes that traders are long puts and or long calls. So market makers are negative short puts and short calls for stock. So I hope that answers your question, Stephen. So on the put side, similar positioning, and on the call side, different positioning. All right, Stephen, let me know if that's what you're asking and if that answers your question. All right, does anyone have any stocks they want me to take a look at? All right, so now S&P 500, SPX, ES trading above the 5,500 volatility trigger. That's this line right here. Looks like I'm about to get an alert at 55.20. I'll need to go look at one of my positions. All right, so again, quite a range today. Let's see what options traders are doing. Go back to the index signal. Pretty choppy. All right, this is what this is really what is driving price this afternoon, is traders buying calls and selling puts in the S&P 500 equities. Let's check NASDAQ, go to the Mag 7. And again, traders continue to buy calls and sell puts in the Mag 7 stocks. Go to NASDAQ. And there you go, NQ now trading up above its upper daily expected move. So from the lower daily expected move to the upper daily expected move, which was plus or minus 262 points. So a range of over 520 points for NASDAQ today from low to high so far. Quite a day. Great trading today. All right, last call for stocks or questions. All right, I'm going to wrap it up here. Trader HE and everyone else, great to see you here in Discord. Thank you very much for watching. Thanks for your questions and comments. And I will see you on Friday. Thanks again. Bye.